Hi, and welcome to the Market Alert for Tuesday, the 28th of September 2021. So yesterday, bloodbath batters big tech as small cap surge on short squeeze, according to the main news there. Today's surge in small caps relative to Nasdaq was the largest divergence since March, but do not panic. Also, yields moved sharply higher yesterday as well on the two, all the way through to the 30-year. Other news, of course, all hell is breaking loose in the energy markets. If it's a cold winter in Europe or Asia, we have a big problem. If it's cold, and on top of it, if it isn't windy, then we have a much bigger problem. We will face shortages. Well, we're already seeing that, but at the moment they're media engineered, aren't they, of course, as we've seen over the last few days. And I thought this was an interesting one as all of these Fed members are speaking this week. Kaplan joins Rosengren in retiring amid Fed ethics probe. It's hilarious, this is. Rosengren blamed a kidney issue, needs a lifestyle change, and Kaplan admitted his trading was a distraction. You mean the amount of money that he was making and not having a losing trade, I suspect. That would be one hell of a distraction. It's called greed. So, yeah, apparently they're both stepping down after the ethics probe, which, again, we all know is complete BS because you can't tell me that Powell wouldn't have been aware of it. And Powell's probably been doing the same as well as Yellen, Bernanke, all of the others, Greenspan included. So there you go. I have got an implied volatility chart. Let me just drag this in. We saw a bit of an increase yesterday from 1440 to 1516, despite the fact that the market actually moved higher initially, which again we'll look at in just a moment. And today, Tuesday's news, Powell is testifying at 3, so the markets could be quiet this morning, depending on how they whether want to wait for him to see what he's got to say. We've got consumer confidence also at 3 p.m. That's forecast slightly higher. And then again, we're back to another couple of FOMC members, Bowman and Bostic. So we'll see what they have to say as well. So it's a day again of central bankers speaking. Let's have a look at yesterday's Dow, and we can see that the market moved higher, but then was sold into as it came back to close on or near the low, but stayed above the 62% retracement that has been drawn in from this high to this low. Also staying above the 20-bar moving average there at the moment, and reversing overnight and starting to come back, which is no surprise, is it? So watch out for the upside targets here of 78 and also 89 as areas of potential resistance. But we're making progress back to the upside, which is no surprise whatsoever after the last 13 years, is it? We've seen this many, many times. So yesterday morning for the Dow overnight New York, we see the market being pressured to the downside, trading down to Friday's close, and then we see the buying coming into the market here, and then holding out here before the market actually opens an hour before, and then straight up 100 points, 200 points before it blows out, and then the market reverses and comes back. As we can see here, now far did it come back? Well, let's just have a quick look from this low to this high, right down to 89%, where it has stopped overnight, and the market is now advancing towards the upside there. So we've done the 89% on the downside. On the upside, we've got a point here that we could use, a data point, and here, and of course we've got this one also here. So let's have a look where we are from this one down to here. You can see we're at 78%. If the market takes out this one, then I'll just roll back to this one, and then this one, and then have a look at the price action around those areas. And that's how you just roll the fibs through the chart so that you can actually get some indication of where prices are likely to struggle. And speaking of struggling, yesterday, even though the German elections boosted the market initially, you can see that the market stopped at 89%, and that happened more or less from the start, after the futures market priced in the change of political party in Germany. And again, you can see starting to move back to the upside, but we need to close above the 20 bar moving average for the German DAX to continue its move back to the upside. It'll need to take out this 89% where it struggled for Thursday, Friday and Monday, and then you'll have the resistance at this level as well, which you can see there. In the 30-minute DAX, there's your yesterday morning. You can see the market moving up to on the upside. Then initially the cash market moving up and then stopping at Friday's high. Just the same pattern for the Dow in yesterday afternoon session. We had this in the morning session. You can see that rise, and then you see the selling coming in, and then the market trading back down 100 points there. You can see this in more detail in the 2-minute chart. You'll see the rally there in the futures market as the announcement of the German election, or the outcome of the election. And if you look across from here, you'll see that drawn in from there to there and then back is going to be an 89% retracement. So from there to there, let me just redo that and remove the extend right. And as we draw this in, you will see that we have 15,716, and there we've got 15,707. So you've got the 89% retracement in the daily chart combined with an 89% retracement. You've got one here initially in the futures, and then the market goes down and then comes back again. So, but across the top there, if you were to look at this in a 5-minute chart, you would see exactly that's the pattern, or a 15-minute chart where it will have actually absorbed all of this information, but it would still be the same. You're still in it with an 89% retracement, and immediately the market is then hit with some selling, which you'll see there. It's also Friday's high. The market starts to break down, goes through the 20 bar moving average here, closes below the high and the BRN, and then struggles to actually close back above both of these. And you can see the red bars there, all of the selling, and the market then moves to the downside. And then it just traded sideways. It was most odd. Became really, really quiet considering the news that had been announced. But it took the morning to break down. As you can see here, it started to break down from 1036, and the market moving down a further 100 points there, oscillating between the up and down movement. You see the DP level there, where the market found some support, rallied back, and again inside of here you can see a small 89% retracement. The market then breaking down once more. Again, once we get here, we get a rally back down 89%, but then I'll just drag this over here, from here back to here will be 89% as well, and from here to here will be 78. And then we kick off in the afternoon session. We got the market moving higher to begin with, the Dow moving up as we saw, continuing that normal pattern of rallying. And then the DAX actually said, no, let's get rid of a few people first, and they did. And you can see this, all of this red here, as the market down to Friday's close, and then you'll see them buying back in with this green bar here, where they bought back in. The market reversing, and then moving back to the upside to the 200 MA, just through the BRN there, before moving back and then following the Dow as the Dow started to sell off. We don't get a good retracement back here. There's a small retracement back, but what you do get is from here to here is an 89%. Prices below the 20 bar moving average and stuck at the BRN with the 200 MA above, and then prices eventually start to break down. And you can see the demand coming into the market here. The volume's greater than the previous bar, and they bring the market back. And this is way after the market's closed, but the pattern is so repeatable that it's well worth pointing out as an educational tool there. So let's have a look at the metals markets, still under pressure. They were moving a bit higher this morning, but seems like it's coming under pressure as well. I'm still not convinced of any move to the upside just yet. I don't mind being wrong about that, but I still have the order in down at $20 just in case. Not actually buying anything at the moment, although with the 89% retracement that we've seen in this area on Friday, seems to be holding at the moment. Could we have this, or is it a case now that we end up going this way? So we're stuck sideways at the moment. Gold has come under pressure in the last half an hour or so. This was moving up quite strongly, but now is under some pressure. The US dollar is still showing sort of pressure to the downside there at the moment. Let's have a look at the 30-minute. Yeah, it's found support at yesterday's DP level. That's why gold then is struggling a bit at the moment on an intraday basis. Silver, there you go, they've just slammed it in the last 30 minutes. I thought that was odd because when I looked in the early hours this morning, it was sitting at 22.50, which you can see there, and they brought it back, but now under pressure, as we can see there. What I'll be looking for in the 30-minute chart is for prices to hold at this 89. If it breaks 22.50, then, like I say, in the daily charts, we're heading back down to these sorts of levels. And then below, we look at the monthly chart, we've still got that 21.68 and a half level that is still currently on the cards. Okay, that's it for this one. If there is anything else to report, I will let you know. But let's wait and see what Powell has to say at 3 p.m. and take a view thereafter. As ever, thanks for watching. See you in the next one.